And then our other three methods will jump into the already established trend at what I call high potential points where again the risk is definable and it's a good bet to get into that trend thinking that it's going to continue. And there's at least one method buys on weakness, another buys on confirming strength. And the last method is one of my favorites. I call it the trend recovery method because this is when everybody thinks the trend is done. It's cooked. It's over with. And under certain conditions, which we define with this method, it probably isn't. And it's a great place to get in because it like comes to life again, like the phoenix. and boy, it takes off for another leg up, much to everybody's surprise. So that's how we approach the markets. And we're looking for those opportunities, but we're managing risk all the way.
I was interested I know you touched on the stop method, or the exit, the way that you exit the trade. Does that exit method, are you applying that in all of the four different methods that you do, or is it a variety of exits, or is it that like the simple and going for the one throughout, or?
Yeah, it's the same basic approach for all four methods on the exit, except that the trailing stop rules are somewhat different. Yeah, because you have to pay attention to what phase of the market you're in. What phase of the swing that you're in. Will tell you how wide to place your trailing stop.
With that, because I think that's, again, it comes back to that thing we were talking about earlier. It's that classic thing of the trader needs to identify what it is, the trend or the time in the market that they're trying to capture. They need to identify that what that is, and then ensure that the width of the stop is wide enough for you to actually allow yourself to even capture that stop. So the actual width, the methodology of calculating it can be the same, but let's say, I don't know, just to do a ballpark one, there's tons of different ways to calculate stops, but let's say we look at something like an ATR stop, or maybe even a lowest low stop, to increase the width of that stop. Let's say for an ATR stop, you might just increase your multiplier a few times, or if you're looking for the lowest low stop, you might increase the look back period of which you look back, which basically is increasing that width depending on what it is, or shortening it if you're trading for really short times. And it is key to make sure that you've appropriately matched your stop to the four methods. So it's really good to hear that you actually, with the four methods that you give, Bill, that you'll actually identify what that is, because that's key for every trading system.
Indeed. Well said.
And I think one thing I definitely want to point out, because it's something that is a unique way of looking at things that you've mentioned that is a little bit different to the way that I teach my clients and my traders. But I wanted to touch on it to just make sure I pointed out to everybody that it's not flying in the face of some methods that I've taught mine. In fact, it's very much thinking along the same lines and almost putting a new spin on it. And it was that idea of I tell my traders, I'm like, you want to make sure that you ride the trend as long as you can, just like you said. And I personally don't like setting profit targets, because I feel like it limits the amount that stock can run. But that's initially when Bill mentioned that, my initial gut feeling was, oh, watch out, he's going somewhere that this is probably not the method that I'd go. But he pulled it straight back by saying it's almost like that profit target. It's like it's getting you to break even and making sure, by selling that first amount at that profit target to get you to that break even. But then it's still adhering to that, the cardinal rule of trading of making sure you let your profits run, because really that is going to be where you make the big bucks, is by letting your profits run. And that initial little methodology, it's kind of smart really, because it's locking in that small amount of profit is going to put you at your break-even point. And then it's almost like, I think I've even heard you use this terminology before, Bill. You call it like a free trade. Is that?
Yeah, exactly. You're hitting on a real important point here. Yeah, ideally you want to let your profits run, but I've found that most traders don't have the discipline to do that, and so
Mm.
they start hurting their positions, sabotaging what they're trying to do. But if you say, all right, look, take half off or a portion of your position off at a predefined profit target, now you've got profits you've taken off the table, and now you should have the discipline to stay in there with the rest of your position and follow it, let your profits run, and follow it with a trailing stop. And I found that really helps traders, over the hump that can't follow the trend, that can't stay with it. By letting them take some of the money off, then they've got the conviction to stay with it.
Which is it's fantastic. It's almost like once you are in a winning position, the trader then becomes using that methodology becomes almost risk seeking, which is the way that you need to be. When you're in a profit situation, you should try and seek that risk by letting the trade move. And when you're in a losing situation, you need to be risk averse, as in, you need to cut your losses short. And when you're winning, you need to make sure you let your profits run.
Yeah.
Another little spin that I try and put on it is sometimes as the position or the trade starts to go into profit as well. I've tried testing and it's worked quite well for me of setting slightly wider stops than what my initial stop was calculated. So as it moves into a more profitable situation, you can widen the stop ever so slightly, and that even gives it the opportunity to run even more, or like you're giving it that. It's that idea of becoming risk-seeking. But I think the reason I wanted to touch on that was just to show you the different elements that you'll learn in Bill's course, because I've been fortunate enough to get a preview copy, and I've had a look through, and it's quite a solid course. And it's that idea of there are elements in that course that even if you didn't trade the one particular method as it is exactly, you can take chunks of that and almost drop it straight into a system that you're trading at the moment, and it will improve your trading that way. Or if you don't have a trading system yet, you can take one of his methods and tweak it so it suits your methodology and suits you. It's one of those things when you're working with a system that adheres to these fundamentals, these cardinal rules of trading. You can almost, take portions of it. You could rip out the money management of that system and drop it into another system, and I'm pretty sure it would improve the chances of that system just by ripping that out, let alone looking at the way Bill enters and also exits.
Yeah,
So
absolutely. Absolutely.
I think the course itself, it's really quite solid. I did have one or two smaller questions, just thinking about, okay, the way that you've designed the methodology as it is now, what type of term of the trade are we looking at? Does it vary massively amongst the four different methods, or is it hard to say because you're letting your profits run? The term could be, from a week to a couple of months, or
Yeah, I think it's about the same for all four methods. The and it is about a week to 5 weeks, sometimes 8 weeks, 9 weeks, 10. I mean, if you really get going, it can be 10, 11, 12 weeks. But you don't
yeah,
mind that at all because every week that
you're
goes
winning.
by,
Yeah.
yeah, you're winning. But any one of those uh, junctures in the life of a trend can take off. It can be the initial breakout, can just take off right from the get-go, or it might be then getting back in the trend after it corrects.
Mm.
It might be when you think the trend's over with, it like I say, it comes to life, and that's when you get the massive move up. So it can be any of those.